In case you're not paying attention to the markets, yesterday was a very red day in the United States. The markets were down all over the place, including the Dow Jones, the S&P, the Nasdaq, and pretty much everything in the crypto market. Some worse than others, but there's one thing. In fact, there's actually two things that I want to talk about. Both are extremely bullish. So I'm going to talk about both of those factors and how they affect the cryptocurrency markets. We're going to talk about Bitcoin, we're going to talk about XRP, some of their support levels, and how long it could actually take, depending on what these numbers that we're going to take a look at actually take to come to fruition. Because if it actually happens, it could mean a huge boom, a potential super cycle, maybe for Bitcoin, for crypto. Well, who knows? But this could be the start of it. I'm going to tell you what to look for. Hey everyone, my name is Randy. Welcome back to the Late Night Grind. And right now on this channel, we are covering cryptocurrency news, investment markets, and personal finance. So if any or all those topics interest you, go ahead, hit that subscribe button, join the Late Night Grind community. And if you do a couple things, I'd really appreciate it. Smash the thumbs up button and watch this video all the way to the end. If you do that, I'd greatly appreciate it. All right, guys, let's jump into it. So tariff news, that is the big term of the day. Tariffs, that's what's tanking the markets, right? That is what made Nike drop 4.5% in one day because Trump slapped a 46% tariff on Vietnam, where Nike employs 430,000 very, very low wage employees, might I add. And of course, their investors saw that and dropped some of their Nike stock. Okay, well, the rest of the market did the same thing. There were some huge drops across the market. The Dow Jones dropped 1,600 points. The S&P lost approximately $2 trillion worth of value in one day. And the Nasdaq posted its biggest single day loss since the COVID crash. So is it the tariffs? Because of course Trump talked about the new tariffs he's tacking on to pretty much all countries, being that the United States were tariffed nearly twice as much on almost every single developed country in the world than what we had been previously tariffing on them. The 10-year yield went from 4.79% to currently at just over 4%. Now that drop, it might not seem like a huge drop, but considering there's $36 trillion in debt, guess what the United States gets to do with their debt? They get to refinance it at a much, much lower level. Some people have been pointing out this for, well, really since Trump came into office, that his goal seems to be, well, if he wants to put the United States on the right track, first you got to pop that bubble. Pop the market bubble. Pop the crypto bubble? Well, we're going to see. But regardless, it looks like some of the things he's doing is obviously not good for the market. At the very least, it creates some fear. And like you have in the cryptocurrency markets, there's a lot of people just pulling cash out and holding it on the sidelines because they want to see what's going to happen. They're like, yeah, I don't know if it's a good buying opportunity yet because I've been hurt way too many times buying this dip in the crypto market. So what's going on with the S&P? Now, before I get into more specifics, I wanted to introduce you guys to the sponsor of today's video, and that is Doge AI. I'm going to take you directly to their website and introduce you. Welcome to Doge AI, otherwise known as Doge 2.0. This is their website, Doge, the people's cryptocurrency. So what I'm going to do is run through their website and show you exactly what they're doing because they are just now launching, and as you can see, they've raised just over $500,000 and climbing. Now, this is an interesting one to get in early on. They have a social platform that they're working on, new Doge AI that they're working on, and of course, their blockchain and tokenomics, which I'm going to go over. They're also working on NFT marketplace and, of course, a game. So let's dig into it. And I first want to take you to their X profile, which you can see here, and they're followed by some pretty heavy people. You get the Elon Musk parody, but also followed by Elon Musk himself. So they have some weighty influence, and this was an interesting one when I was taking a look at it. So let's go ahead and take a look at the tokenomics, and this is how it breaks down. They're going to be distributed into 14 pools, each with different unlock schedules, everything from validator rewards to 6.5% going to funds and backers. Their AI ecosystem, which they are building and implementing into DeepSeek. You've got 5% to the team. They're going to be doing airdrops, having some for liquidity, social network, and of course the public round sale 1, 2, 3, and 4. This is what the blockchain they are currently working on, Doge Nero Chain, an innovative high-performance blockchain designed to provide superior scalability, security, and efficiency for decentralized applications. There's a lot of different things you can go check out on their website in terms of more details of what exactly they're working on. But I want to continue on, talk about Doge's AI mission. Now, this is one that I thought was very interesting. They're actually developing their own artificial intelligence platform being built on the DeepSeek technology. DeepSeek, of course, came out a couple of months ago. This is what I wanted to point you towards. As a reward for their contributions, users receive tokens in the Doge cryptocurrency, incentivizing continuous development and innovation into the ecosystem. So people actually get incentivized to build into this AI. And in my opinion, that's a very forward-thinking thing to do. They're also working on a next-gen social platform called Shibber. They're also releasing a game, which is going to be coming soon. And if you're interested in some more details, you can scroll all the way down and check out their roadmaps. Next, I want to take you over to how to buy Dogecoin. If you click on Open the app, it'll take you to the dashboard. Here is where you can connect to your own wallet. I connected to my Phantom wallet, and you can go ahead and purchase the Dogecoin here using different cryptocurrencies. And you can see below the live transactions. You can see the top holders, how much they actually hold. But you can go through and purchase the Doge AI coin here. And you can follow along with the price here or various other places. So if getting in early into an altcoin cryptocurrency before it could be blasting off into the stratosphere, this is definitely one to take a look at. So if you're interested in buying, there'll be links in the description. There'll be links pinned in the comments down below. Go ahead and check it out. It could be major first mover advantage. Well, if Donald Trump gets his way and a lot of these tariffs go into effect, at least in the short term, that's going to put some pressure on not just the United States, but the world. But here's what the long-term goal and likely outcome could actually be. Number one, it's going to be America first because it's bringing manufacturing jobs back to the U.S. It's going to make the dollar maybe not strong, but at least more stable. It's going to lower inflationary pressure and, of course, save trillions, literally trillions of dollars in United States debt if they can refinance at a lower level. Now, some of this is used as bargaining chips. There's been other countries that have come to the table that they don't want to get hit with these higher tariffs because they know it could be devastating for their own country. And as we're going to be finding out in the coming weeks, some of these countries are going to be making huge concessions. Some already have. So aside from the fact that at least in the short term, you could see some pressure, in the long term, you could see a lot more jobs, at least in the United States, less inflationary pressure, and typically that signals a better market for things like cryptocurrencies and other risk-on assets or tech stocks to be in a boom market. Now, when could this actually happen? Because it ain't happening right now. Well, there is a couple things I want you to look for. Number one, there is major, and I mean major, bullish divergence, specifically on the S&P 500 over the past 4 years. And if you don't know what that means, it basically means the RSI, the Relative Strength Index, is indicating that this is a local bottom or a local bottoming, or at least in this current month, the month of April, could see a local bottom or a transition to start climbing again. In my opinion, it's probably going to be a lot more chop because a lot of people are taking cash out and they're in that wait and see zone. Now, let's talk about some time frames in terms of when something could shift, because we're obviously tracking the M2 global money supply, which seems to have a big correlation with the price of Bitcoin and other risk assets, or what is considered risk assets. But we're also looking at rate cuts and quantitative easing. Now, it looks like Jerome Powell not in a position to do any quantitative easing. In fact, just a couple of months ago, he said they're going to be lower. The Fed wants to lower their balance sheet. In other words, not print more money and buy more treasuries and things like that. So how could they inject some liquidity into the market? Well, the other thing is by doing rate cuts. Now, it's not a direct liquidity injection like, say, something like stimulus was and direct money printing from the government. However, rate cuts do have a kind of a boom effect, but it's a delayed effect. Typically with rate cuts, it's not exactly great economic conditions as to why they have to lower it, other than something like inflation where they have to raise it. So if you're looking at lowering cuts, it typically happens. The 2008 credit crash, they lowered rates. The 2000 dot-com bust, they lowered rates to next to nothing. And then, of course, after COVID, they lowered rates once again. This can all lead to a couple of things. Number one, it leads to the velocity of money, ease of lending, and the sheer cost of borrowing money becomes much easier, much faster, and much cheaper. So indirectly, it essentially is a liquidity injection. So if you watch all these things play out, by the end of the year, we could be seeing rate cuts. Well, potentially 1.5 points by the end of the year. That is, if you look at the CME Fed Watch tool. And it changed dramatically in just one day. Now check this out. Just yesterday, there was an expectancy of about a 0.5 point rate cut in June. There's about a 25% expectancy. Yesterday, that expectancy was 6%. So in one day, with these markets cratering already 6%, that 6% expectancy jumped to 25% for the month of June for a 0.5 point rate cut. How about this? By July, there's an expectancy for a 3/4 of a point rate cut. By July, that is now at 21%, up from 4% just yesterday. How about this? Going into December, there's an expected rate cut of about 1.5 points. An expectancy is now up at 29%, up from yesterday. It was at just 7%. So in one day, with these markets tanking, a lot of people are now expecting the Fed to have to be forced into making these rate cuts. So if you see almost a de facto liquidity injection via some rate cuts, if you see a bubble being popped now, in the United States specifically, but other countries are going to be following suit in terms of being able to refinance their debts at lower levels, and these tariffs creating some uncertainty in the markets and thus creating the economic conditions that facilitate the rate cuts and liquidity injections. And if you're China, just flat out stimulus, they just insist on printing more money. They're trying to outdo the United States. It's kind of crazy at this point. When you look at all that, the M2 global money supply is going to grow. If this happens towards the end of this year, that lines up exactly with what the cryptocurrency markets are doing. Right now, XRP seems to have found its great support at around $2. Bitcoin has been holding strong between 80 to 82,000. It's holding that support level. In my opinion, it's going to take an awful lot for this market to really crater any further. And if it does, in my opinion, there's a lot of buying that is being done, not just by retail, but by specifically institutions that have these buy signals just below 80,000 in case it actually does go that low. Other than maybe Ethereum, that's the only one that might look a little shaky right now. As some big crypto analysts have pointed out, there's a potential that Ethereum could drop 50%. I certainly hope not, because that probably means that there's broader problems with the crypto market and these markets as a whole. But let me know in the comment section down below what you guys think about all of these trade war talks, all of these interest rate cuts. Is this going to happen in 2025, or are we going to go into 2026? And is that going to affect the crypto market cycle? Let me know in the comment section down below. You can also follow me on X. We can have a conversation about it there. All right, guys, I want to thank you so much for watching this video all the way to the end, for smashing that thumbs up button. And as always, see you guys on the next video.
Institution. Lambo dreams fueled by them crypto stacks. Future in our hands, we ain't looking back. XRP to the moon, watch them rise and shine.